Welcome back. You're watching Commodity Champions. We did sort of speak about the MSP hike, but let us now do a roundup of what happened in the crude oil market sector this week. The oil prices have been steady around the 4-year highs. However, the outlook for crude is uncertain after the Iran sanctions. Remember, the sanctions will take effect on November 4th, and the experts have warned about low spare capacity leading to fund houses building long positions. When it comes to the near-term forecast, most people like Australia and New Zealand banking group Mercuria, Trafigura have forecasted the crude prices reaching the triple-digit levels. While the Bank of America Merrill Lynch expects the crude oil prices to hover around $90 per barrel. To speak more about this and more, Azlin Ahmad of Argus Media now joins us. Azlin, hi. It has been a very volatile week for the crude oil prices. How have you read the forecast on crude, calling it $90 or even $100 per barrel in the next 3 to 5 months?
I think that the way things are going right now, with Brent already moving up to 84, 86, there is that possibility of prices moving closer towards $90. I'm not sure whether it's going to hit $90, but I think that over the next month, we have to be prepared that we probably see Brent prices closer to the high 80s than the low 80s. But we have not predicted $100 oil for this year. I think that our expectations is that there should be fundamentally, the market should be fairly balanced for the year. So I think that we're not expecting $100 oil at least for this year. And we have to also see that there will be some cap in demand as the trade wars have not really disappeared yet.
Okay. Azlin, the markets did take some solace in this week from Saudi Arabia and Russia, saying that they would increase supplies to meet the gap created by Iran, but that would lead to the global spare capacity then at record lows. However, the fundamentals are still strong. How would you read into all of that contradicting statements coming in?
Well, I think that there's no doubt that the prices are going to remain firm. I don't think we're going to see prices drop below $80. And as you say, Saudi Arabia and Russia have expressed their, they have said that they are willing to increase production, and they can increase production if the market needs it. But as you say, that means that the spare capacity or the cushion will be a lot thinner, and that will make the market a lot more nervous about unexpected supply disruptions, let's say in potentially in Africa or in Venezuela or in other countries. And I think that is going to keep prices firm. I think that, well, the Saudi oil minister has said that he thinks that fundamentals are actually quite healthy. And we saw in the last week that US crude stocks actually rose 8 million barrels. So I think that right now, maybe the market is not super tight, but I think that there is a lot of nervousness, and that is factoring into the prices, and will probably continue to keep prices on the boil at least over the next month, as the market ponders what the final US decision on Iran exports will be, whether they really want Iran to totally cut exports, or whether they will be a bit more flexible and at the last minute maybe give a little bit of exemptions for some countries to allow them to import limited volumes of Iran. So I think that right now it's a little bit, everyone's watching what the US final decision will be regarding Iran.
Well, yes, the next 1 month, of course, will be very volatile. But do you see this uncertainty ending by 4th of November, or would you see it continue by the end of the year? Because you again have an OPEC meeting in the month of December.
I think that for now, I think we're going to see a very volatile market over the next few weeks. I mean, we already saw that over the last few days, prices go up a dollar, come down $2. So I think that we're going to continue to see that. And every time there's a headline news, something about a supply increase or something about uncertainty, it's just going to go. It's going to be very driven by headline news, I think, over the next week and over the next few weeks. And I think we are going to see a very volatile market throughout October. I think there's no doubt about that, because I think the market's trying to find some sort of, I guess, a price balance, and trying to just figure out what the what actual demand supply will be come November.
Well, that's about November, Azlin. But what's your sense on the OPEC meeting in December? Do you see the cooperation, the output cut agreement continue into 2019?
I think that there is a great possibility that the producers, the OPEC and non-OPEC producers, well, the non-OPEC producers led by Russia, that there seems to be a desire to work together beyond just the agreement that they've had over the last year. So I think that we could see some sort of, I'm not sure what they're going to plan, but I think there could be some sort of further cooperation between the non-OPEC producers and at least Russia and some of the major non-OPEC producers. So it may not be an actual deal, but I think that there is a good desire for them to actually cooperate, so that the market does not go out of whack in terms of the supply, and that they're not competing with each other, and that they could at least maintain some sort of balance so that oil prices don't crash or rise to a level that will actually erode demand. So I think if come December, we could see some sort of cooperation between at least Russia and Saudi Arabia and the other OPEC producers.
All right, Azlin, we hear you. So prices are not going to go below 80, but they can go to 90. 100, of course, is a tough chance, as you've said.